wanted to do a video here on Avalara, which is an IPO that's going to be coming out tomorrow, Friday, June 15th, I believe it is. Um, so the quick summary on it, I do believe it's a strong buy for reasons I'll go into, but as usual per my own criterion that I've made a separate video on, we'll definitely wait for trading range and breakout, i.e. I will not be buying on the first day, but we'll look for things to settle out and see what the trading range is and then look for a buyout. But overall it looks like a very strong IPO, and let's get into a few details on it. So as I mentioned, my number one criterion for any IPO stock is it riding an industry that's got strong long-term growth, and that's basically been, via some research, been proven to be the number one factor for IPO success. So in this case we can say yes, they are riding cloud computing. Specifically what they do is they solve tax compliance on basically a real-time basis currently, so that they're running 16 million tax determinations a day, but basically it sounds like they are serving e-commerce customers, and tax compliance is a huge hassle. I.e. if somebody orders, for example, I do run an e-commerce company, if somebody orders from Spokane, Washington, just as a hypothetical, well, that tax rate for that person is going to be very different than somebody who's ordering from Seattle, Washington, because the way Washington tax works, you have your base state tax, then on top of it you have your city tax, which varies by domain, and I believe there's also a county tax involved. So ultimately you have a series of things, so the rates can vary quite a bit. I mean, it may be 8.6% in some places, and in Seattle it's typically 10 to 10.1, something like that. So you know, it's got wide swings, and yet every single purchase has to be determined what is the proper amount, and the money is held and then of course given to the state at the quarter or whenever your reporting period is. So it's a huge hassle and it's a lot of friction. So that's what they do is by having a cloud API and interacting with a number of different systems, then you know, different e-commerce companies and of course regular companies can automatically compute what the actual tax required is, and do that on a real-time basis. Then it's obviously better for somebody to specialize it and deal with that on a constant basis than it is for every single company to have, let's say, their own compliance officer or try to build up their own software. So by leveraging the cloud, they can take that specialization, and they're not only doing it for the US proper, but they've actually had, I believe it's 4 different buyouts over the past couple of years. I know one was Brazil, I believe 2 maybe in Europe. So they've kind of got a global focus on this tax compliance. In Europe, you've got VAT compliance, which is apparently quite a big market in the sense that you know, per year I think it's over $1 trillion being gathered through VAT tax. So by specializing in that and again offloading that work so that companies reduce their friction with the tax compliance, it's sort of a win-win type of setup. So they do ride a very big trend, which is leveraging the cloud, and of course e-commerce, which runs along with that as well. So it does meet my most important criterion of they have a long-term growth industry. So getting into the specifics of the company, the past 2 years their revenue growth was 73%. I calculated, at least quickly, a 66% gross profit margin. They're actually not profitable currently, and that's largely due to costs of marketing and sales to capture new customers. So they're growing, focused on growing. Obviously once those costs fall away, I mean, software and cloud is very, very profitable. So I have no doubt in a few years that they'll turn into quite a good cash flow type of setup. Their valuation is reasonably good, and reasonably is very, very relative. For example, GitHub, which was just acquired by Microsoft, 25x revenue, which is quite high, but that's the way it is right now. So for a 5x revenue based on 2019 estimate, that's where they're IPOing roughly. So you know, it's actually on the lower end of what's happening right now. But again, I'm not that concerned about the valuation proper, because it is currently in the growth phase. My main concern, which they do meet, is that they are, you know, leveraging the cloud, so they're riding a major trend. I also don't see tax compliance getting simpler. Unfortunately, it seems to get more and more convoluted, so that probably works in their favor. Pull up the other thing I wanted to mention is how this ties in. So I have a separate video on this, but my IPO evaluation process is a multi-part thing, and the first thing is I'm going to determine, of course, is are they riding a strong long-term trend? They are riding cloud software as a service, so it's right up what I want to see in terms of long-term growth expectations. But once they IPO tomorrow, I will wait for it to shake out and establish a base and wait for a breakout above the high of that first day. So I will certainly be watching tomorrow, but I will not be purchasing. So that's my recommendation, is to wait for it to move above the initial high of the day. And that could be next week, or it could take, like in Facebook's case, it could take a year before that happens. So you don't want to tie your money up or go through the stress of watching it go down, at least in the short term, if you can avoid it. So that's it. And yeah, as far as my third step in recommendation on IPOs, ride and add. I do think this company is going to be quite successful, so really kind of looking at it with the mind of acquiring shares that will be held for multiple years and continue to add on breakouts. So we'll see how it does tomorrow, but overall I think it's a very strong candidate. It does meet the criterion for long-term growth expectations, and I'd definitely say pay attention and wait for a breakout.